We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.
Welcome back to the Capital Mindset Live, everyone. Today's going to be the portfolio update in the making. All right, so I think we'll just begin pretty simply. We'll cut right to the chase. I'll recall which ones were the moves. You guys, I can see that there's actually, how many of you are in here? Not in the YouTube. I'm talking about just on the sheet itself. Yeah, there's like a decent chunk. But I saw people popping in here and there the past couple of days or so. So I imagine some of you have already seen this. But as always, this live stream is to, allow everyone to ask questions as well, and we'll go through all the changes basically. So Netflix, since the last update, has become the largest holding in the portfolio, not because we added capital, just because of the performance. And so I am no longer, Alphabet is no longer the number one, but that's because Alphabet had a poor year while Netflix has had a great year. So if Alphabet were to recover to its, let's say, all-time highs, that would be different. However, let's actually re-say that, because if Netflix were to recover to its all-time highs, then I think still Netflix would win. But I think Alphabet's more like, because Netflix was kind of crazy when it was there. Global payments, nothing much has changed there, actually. If anything, Meta is going to be the biggest change in dollar terms and in percentage terms. So when you guys noticed Meta last time, you saw it at a higher cost basis. You noticed that the cost basis come down. And if you were watching the portfolio up until, or you saw what happened with Meta, let's just say that, it crashed decently in a single day. And that had an impact of about 1 point something, almost 2%, 2 point something percent probably, in terms of total value of the portfolio. And so I was able to reduce the cost basis on those Meta shares and kind of bringing it closer to that 7% range, or back to that 7% range. Now, Activision, nothing's happened there. Unum, nothing's really happened there. I'm just shocked that we got to 46 so quickly. And the shares that are under contract in December, again, very thankful in that case that the opportunity cost, because I'm still going to generate over 100% return on those shares. Thankfully, it's a small portion of the overall portfolio. So AbbVie, nothing's happened there. Aerojet Rocketdyne, this is the one that now has been making some headlines. And those of you who saw the bit of a blunder, so I sold contracts right before the day they actually announced, and then I rebought those contracts at a loss. Well, if you actually were to do the math or the percentage math that implied, it was an opportunity cost that was well worth, removing those contracts or taking the L there for the potential. And, who would have thought the very next day? It goes to show you. But I'm highlighting that to kind of say, okay, well, selling contracts is not without risk, as other YouTubers might like to allude to. However, each of the other times that we've done it this year with Aerojet Rocketdyne has been very successful. So the way you can kind of think about it is that's counting against the successes of this year. So my success on premium selling on AGRD isn't as great as it was. But we're going to make a lot more money on actually the potential to sell these shares at a much higher price. Okay, so Leggett & Platt, nothing's changed there. The newest addition to the portfolio, those of you who were on the call Sunday, and I was talking about it in the Discord earlier this week. This is no surprise to you, and I updated you guys also before this live stream, before this live stream, and that is Intel. So that is a surprise. On the Snapchat video, if you guys haven't seen the Snapchat video, I proposed a question to everyone watching it. I said there is a stock that I used to have a negative opinion on. It's not that I have a super positive opinion on it. It deserves its own video, so don't think this is the video. This is not the video. This is the portfolio update, but it's going to get its own video. But I proposed a question to the audience. I said, well, I want you guys to try to guess what stock it is. Some of you guessed it, by the way. Okay, so there are a couple of you that did comment in the video, and you guys did guess it. Others guessed other stocks that, good guesses. I think the other guess was SWK, which is Stanley Black & Decker. No, not that one just yet. But yeah, it was Intel. And so I did see that on the earnings they did pop. That's just luck. That's not because somehow I knew. And still, it's not really a large position. We'll talk about what it replaced, because it replaced a stock within the portfolio, and we'll get to that one. So this video, this live stream serves as the explanation for why that that stock is gone. And then going down the list, you guys have already known that I was buying more Wells Fargo. Nothing happened between Markel, Dropbox. Nothing's happened. Dropbox is the next one that if there's another one on the chopping block, it would be Dropbox, but it's not that it's like coming anytime soon. Warner Brothers, still nothing happened. The newest one that we talked about in the last live stream, it's actually in the title of the last live stream, so I'm just directing you guys if you guys that somehow got you guys off guard, but I don't know why. It would, but Realty Income is back in the portfolio finally. And this one's one that I'm going to be accumulating. This one's entirely in a retirement account. I don't hold it at all outside of a retirement account. And then LYB, nothing's changed. Celine's been nibbling here and there, but really no big dollar ads there. Citigroup, same thing. Amazon's the one that I got really excited as it came down because it's the one that I didn't divorce. And it's the one that I would like to bring back to its former glory in terms of percentage position within the portfolio. There are many of you that I really do like within the community that we're not an echo chamber. So many of you do, have differing opinions and challenge me on certain investments, and that's beautiful. And one of them is actually Amazon. Okay, we do have a lot of disagreement on whether or not Amazon's not a fantastic business, but sorry, that is a disagreement. Never mind. That was actually the disagreement, that it was a good or bad business. Because I wasn't even defending the stock price. I had to defend the business to some people. Here's me owning all three stocks in the title. Well, okay. I did the title to play around with words, guys. That's why I did the title. Okay. It's not it's not because I like to do sometimes titles that are funny like this because it's kind of in our community we kind of use it as like I don't know, I think we all collectively cringe at YouTube or finance YouTube as a whole. And so what I should have done on top of it is had a thumbnail with like fire and maybe some colors, some text, with some colors and pop out to get the eye's attention. Should have done that probably along with this title. Would have been more effective to get the the people to click. But yeah, no. Hey, don't worry about that. So then on Boston Omaha, nothing's really changed with that one, even though, my gosh, that one's been really volatile this year. But I haven't added since for a while now. There's actually not even that many shareholders. We were talking about that in the community the other day. There's not even that many shareholders, individual shareholders in that company. Thor Industries, nothing's changed. Qualcomm, been nibbling, but not really big dollar amounts. Dow, no, nothing's happened there. Truist Financial, this is the other new one. All right, so this is another new company within the portfolio, a regional bank. This is the company that came about with the merger of BB&T and Suncor. I actually do really like the portfolio book they got going on in Truist Financial. I don't think it's pretty good. It's really good, but I don't think it's as good as like Wells Fargo's right now. But Wells Fargo does have that asset cap, which again, I've already talked about that in older videos, but I'm more than happy to. Why are you still accumulating? Oh, let me actually go ahead and address that. I don't change often the accumulating and holding. It's accumulating means that I would be interested in accumulating more. Okay, so good question, and that's why I do these live. It offers you guys a chance to ask me live. But if it's accumulating, it doesn't mean I'm buying all the time. It just means there is the potential or desire to acquire more. If it's holding, I don't have a desire at the present moment in time to acquire more. Maybe because of there could be a million reasons, but it's just quick. Let's see here. Cirrus Logic, nothing's changed there. Advanced Micro Devices, that's been nibbled on. BASF, Rio Tinto, Molson Coors Brewery. I got a question. When was the start date of this portfolio? No, this is just the continuation of my portfolio. It started, so basically YouTube is like a vlog of sorts. So I've been doing portfolio updates on YouTube, and you've kind of been seeing some of the changes throughout that time period. I can only just say you can go back to the very first ones, and you can see what's happened across time. But yeah, so of course some of the positions are older than the YouTube channel, right? Now the ones that have, like, you can kind of see when the older videos and what's kind of gone. There's actually a decent amount that's gone. It's been a pretty active year, frankly. Usually I'm not this active, but it's been a fairly active year. And the hardest times is actually taking the profits rather than anything else. It's no longer in here because it's gone. But Cardinal Health, you guys noticed that one's gone because that was the last portfolio update that we got out of. And I think Cardinal Health still ran up, still at like 75. So we didn't actually time the top perfectly, but it's not about that. It's about taking our profits and when we're comfortable. So Cirrus Logic, nothing's really changed there. Let's see here, AMD, BASF, Rio Tinto. Still, that's a watcher position. And then Molson Coors Brewery. Finally, we got to the one that is gone. All right, so Molson Coors, yes, it is gone. Molson Coors, throughout the duration that we held Molson Coors, was pretty good performance. Not going to complain too much on it, but could have been better. And I have some concerns about some of the input costs going in for some of these beer companies. I know that some people within the community really do like Boston Beer Company, ticker symbol SAM. And so, I know that, Molson Coors going into it, they have a decent strength in their brands, right? But one of the problems that the company had and was struggling with was its debt pile. It was debt laden. A lot of the beer companies, except for Boston Beer Company and Constellation Brands, were debt laden. Actually, scratch that. Constellation Brands became debt laden back in 2017, 2018 when they acquired Canopy Growth Corporation. That CEO, I don't know what he was doing, but that was on his way out. Pretty crazy. And Nash, I love you. Nash always trolls the new people, but he's a very fun member of the community. These Brits guys. But okay, Kingdom. I know that you were the one who was discussing that in the community, that you've been buying Sam. Yeah, no, Sam's one of the better capitalized beer companies. But yeah, if you look at Anheuser-Busch, if you look at Molson Coors Brewery, very debt laden. A lot of they had to do a lot of capex more recently, a lot of brand acquisition. They had the whole war against craft beer that's been going on for a pretty long time. Sam has kind of been the pioneer and the leader in kind of bringing about a portfolio of craft beers. Anheuser-Busch has been doing it too, but they've been doing it a lot of the acquisition route and using debt. They've also have an involvement of a particular asset management group that you guys know will remain unnamed. Okay, but those of you who are new to the channel, I don't like a particular asset management group, and I'll just say the name starts with 3. I'll leave out the rest of the name, or I'll finish it. 3 something capital. All right, I'll let you guys guess. You guys already know. Let's see here. Okay, so I want to quickly make sure I cover everything else, but one other thing, the YouTube index. All right, so I have to sometimes reiterate this, but because some people do get confused. And actually, it was a missed opportunity not to add Voyager Digital into this. So this is the YouTube index. This was created, I forget what exact date, but I do have a video on the channel. So that's actually the date I created it, or around that date, that very week at least. And so the point was to put all the stocks that are talked about heavily on YouTube and kind of track them. So there is some caveats here. Remember that, for one, again, Voyager Digital did not make it onto here, even though we were talking about Voyager Digital, and it went bankrupt because it would have actually made it even worse, the performance. Actually, maybe not, because of the 2 different weightings based off of market cap, but there's 2 different styles of weighting, and I'll show you both performing. So one is performing worse than the other. The one on the right is performing worse than the one on the left. And you might be seeing some of the holdings here. They're not real holdings, but you're seeing some of the holdings here, and you might be saying, well, there's some missing here because that one's talked a lot about on YouTube, or maybe you disagree with some of them. I had some people complained that Alibaba was even on here, but I think that Alibaba fit the criteria of decently sized YouTubers were talking about Alibaba, and there was a community on YouTube that was very favorable to Alibaba, so that was the criteria. Because you can see there are some good businesses on here, like Snowflake. Snowflake's a good business, but I would classify that as a YouTube stock. All right, Block is also a good business. Was overvalued, but it's a good business. It's just heavily talked about on YouTube. And it's actually, again, they were already pretty far down by the time they were added to this index. So you have to keep that in mind. It would have been worse if I started this index at the beginning of 2021. And in fact, after I get off this video, if I remember to do this, I'm going to go ahead and put the date it was created somewhere around here, because I think that's important for someone coming on and saying like, okay, where did this start? Because that context is really important. All right, because, well, actually, I think it's funny because we're up on Roblox. Well, we're not up on Roblox, but the index is up on Roblox from when it started. And so, let's see, Robinhood as well by 5%. And what's that other one? By Nanogenomics. Look at that. Look at that, guys. Should sell a course on this. Just kidding. All right, and then so the other holdings on the speculative side, so this is where you're going to see a decent amount or chunk of red. We have Zillow Group. Nothing's changed there. Haven't added to Zillow Group. BurgerFi, the fun stock, so that's not an actual speculative investment, but it's a fun stock. That one's down 56.33%. NCR, that one's actually turned positive. So we took a speculative point in, I think, 2 updates ago or the last update ago. But NCR really crashed on the sentiment around their decision to actually spin off the companies. And investors really did not like that. They really did not like that, and they punished the company for it. So this is a company that we've actually traded in the past. You can go back to the YouTube videos where we did do that. We didn't day trade it. This is not that channel. But we bought it after it collapsed, and then we kind of swung traded. So, and then we're kind of back on. But this time actually is more of a speculative investment that, I think people got a little bit too pessimistic on it. I actually know someone who does work there, and he's a software engineer at NCR, and he has some positive opinions on it. I've done videos on NCR, so you can check that in the past. Altasaurus, nothing's changed there. Coupang, also nothing's changed there. Haven't added or done anything. The one that I'm thinking about, and I've kind of talked to the community about this, is Prosus. So Prosus and Baba, you can check out, and I know you guys are saying, wait. You talk really bad about Chinese VIEs. Why the heck are they even in here? Well, I refer to a video I made back in December 2021, early December 2020. It has a crazy thumbnail. It's about an hour, 20 minutes long. Towards the end of the video, and I think that one actually might have chapters, so it's not that bad. So towards the end of the video, I address exactly why I was doing it back then, and I believe that I'm going to be able to, using greater fool theory, sell these at a higher price, because I don't think the world or the West understands exactly what it is or how dangerous these instruments are. It's my opinion, okay? We have disagreement. There are people within the community who disagree with that commentary, that line of thinking entirely, and truly believe that Chinese VIEs are a good, legitimate investment. And I'm saying it under that perspective. It could be right, but my opinion is my opinion. Okay, so Prosus was a company that we bought and actually replaced Tencent, because if you refer back to that video back in December, I chose to buy Tencent and Alibaba because those are the 2 larger ones, right? And I actually switched out Tencent for Prosus, harvested the tax loss, but still got exposure. And then I told the community, not the community, on YouTube actually, about why I was doing what I was doing, similar in one of these portfolio updates. Well, now I'm thinking about doing the opposite again. So selling Prosus again, harvesting that small loss, because really it's nothing. And then going back into Tencent. So we'll see if I end up doing that, because Prosus is a holding company that primarily just holds Tencent and a couple other companies. Now, Alibaba, actually, you might notice that the cost basis has come down because I doubled the holding. And I could be wrong on this, but I do think that the Chinese government, and in actually accordance with my theory, okay, my theory is that, again, it's all sentiment driven, what's going on right now. I think they're inherently worthless, but I think I can sell these at a higher price. And so we'll see. So if it goes wrong, I don't care. I'm not really going to feel this. And if it goes right, I'm having fun, and I'll be able to sell it on the pop. Right now, I am positive on the new shares that I was able to purchase. So if you guys recall, I made a video recently about Alibaba. In the comments section, the day of that video, I posted a comment letting everyone know. I pinned it. So if you didn't see it, I'm sorry. But you can still have a chance right now. I was actually telling Strongman in the chat that, he could probably, get his cost basis down here. And I do think so. I'm not kidding about that. We just need the Chinese Communist Party to come out and say something positive. I talked about this before, by the way. There's a video I made 7 months ago. And you guys who have been subscribed for me for that time, you guys remember the day after I made that video. And I said in the previous video, if the Chinese government kind of said something positive regarding the business, you could see these pop. The very next day that happened, and I had to make a follow-up video to that, going like, just kind of bragging rights at that point. But yeah, it was crazy. So I do think that can happen again, because I think a lot of the sell-off happened. If you guys listen to the podcast, Xi Jinping and the concerns around there and the conflict with the technocrats. So, yeah, China's a complicated mess. And there's a lot of there's an interesting what's kind of happening now. It's really interesting because a professor from the University of Chicago, I actually released this in the newsletter that released on Friday. He published a paper this month, actually, so it's pretty fresh, that the Chinese economy is probably, maybe, and I don't know if he's right, okay, so let that sink in. I don't know if he's right. But he says that it's potentially 60% smaller than what we think, and that on average, autocratic states have exaggerated, and this is using his predictions on China, that China has perhaps exaggerated about 35% per year around there on their GDP growth, which compounded would equate to around, I think on the worst case, about a 60% reduction in current measure, which is crazy to think about, because if that's true, my gosh, because we already know about the 100 million figure. If you guys don't know that, the population is perhaps 100 million less than what it originally was. So yeah, we are single-handedly stopping capital mindset from growing, LOL. What's going on? What's the growing? What's that? Okay, I have a question, or let me go here because I can actually put the questions up here. Okay. And let me actually use the widget here because I see there's 2 questions. I have a question from Michael here. So capital mindset, I bought my first share of Facebook. Well, look at you. Now we are fellow shareholders. Oh. Go away. Okay. Capital mindset. I bought my first share of Facebook April 2016. Averaged up a bit over the 6 years. Never took a profit. 6-year gain within 6 months, and now down on the position. Epic. Well, yes. I mean, that can happen, and that happens in investing. This is again why there's perhaps investing is not only about where you buy, it's also where you sell when you're investing in individual stocks. This is why you should really everyone should consider the opportunity cost of dollar cost averaging into low cost index funds that kind of remove that issue. Because, I mean, I can tell you probably aren't going to see the prices of VU from 30 years ago. Something incredible has to happen, but you're probably not going to see those prices ever again. And same thing with other index funds like VTI, even VT. Well, VT hasn't existed for that long. But what I'm talking about is the index that they represent. You're not going to see those levels for a long time. I'm not talking about the ETF necessarily. Okay, so let's see here. So far, Fabio has like 50 holdings. I mean, you can call some of them holdings. Some of them you might not call holdings. So I kind of pay attention, like the core holdings, there's 12. There's 12 what I consider to be core holdings, and then ancillary or supporting positions, and then there's partial core. Partial core together make up a core. So if they're like within the same industry, I might choose like 2 of the same or 2 within one industry, and I kind of consider them like one position. So yeah, it seems like a lot, but it really isn't that much. When my younger days, I'm still pretty young, but my younger days, I had a more concentrated portfolio, and of course, so right now it's a little bit of a different strategy, more capital preservation, but still kind of seeking out growth and outperformance. Okay, so you're seeing, of course, China lies about everything. They're garbage. I'm not a follower of the herd, so I must be right. Fabio, did you go over Intel already? Asked like 20 minutes ago. No, okay, so Intel's going to get its own video, but I can give you the gist of it. So pretty briefly, I think that at the price point, and I didn't get it at the bottoms. I think the bottom, it got to a low of like 25. We might even see lower, so it could happen. But if you go back really long time ago, well, not that long ago, I'm making it sound, but early this year, I actually posted it in the community tab. You can actually see that video, but you can see even older videos on Intel, not very positive, and it all began with the disagreement with management's capital allocation strategy. So going forward, one of the biggest criticisms I had with their capital allocation strategy was Mobileye, and it was more not so much that they should spin it off or anything or realize some of those gains or whatever it is. A lot of it was, at the time, I believed, they're not going to get the price they believe for Mobileye because, of course, these things take time to kind of roll out, and we were kind of ending a clown market. Let's call it what it is. And one of the concerns I had was they had other ways or levers to pull to get cash, and they were deciding to sell off assets, which kind of made me believe management's a little bit desperate. Well, fast forward till now, I like the strategy they did with Brookfield, and I tend to change my mind when I believe the facts have changed. So I like to consider myself an open-minded person. And when I look at a situation, I might be negative on a company at some point, and I can turn positive on it. But I'm going to hopefully do it under my own accord because I believe in it, not because, it's the crowd doing it or anything like that. So if the crowd is positive on Intel, that doesn't mean I'm going to be positive on Intel. If the crowd is dogging on Intel, or in this case Meta, or even Netflix, doesn't mean I'm going to be dogging on it or positive on it. And I had that same concern even with like Chinese VIEs. Like when they came down, I made a video saying, okay, I'm going to pause on making negative Chinese VIE stocks for a while, or videos for a while, because I think now everyone's kind of dogpiling onto it. And I feel like now it doesn't really provide much value to dogpiling it further. But under the community's kind of blessing request, you could say, I started to make some content on Chinese VIEs again. And now the community has grown actually a lot since then, because I made a lot of videos on Chinese VIEs when the channel was really small. And now the channel is, well, considering to where we came from, and considering also, by the way, I'm actually happy with the growth because we are in a bear market, and I care more about the quality of the subscriber base. I think the subscriber base here, I know I'm biased, but I think the subscriber base here is of a higher caliber than I would find in some other places. Not to dog too much on other communities, but I do think so. And of course I'm biased, but it is what it is on that. And so, well, with Intel, I think at the price point that it got to, and some of the things that people who know better than me about the technology's potential were actually beginning to also change their mind. And that actually inspired me to look a little bit deeper. And I talked to my friend who actually works at the firm. And then some of the things that we had in our conversation had changed from the let's say, almost 8 months to a year ago. We had a similar conversation, and things were just different. And kind of talking about it, at some point, a lot of it, I believe, will be priced in. And a lot of the challenges that the semiconductor sector will have as we see demand destruction and all these other things will be priced in at some point for a lot of these stocks. So Intel, I think their strategy with Brookfield, I liked it. The strategy with Mobileye here, with this IPO only being about 5.8% instead of the believed 50%, I liked it. It showed me lack of desperation, or the lack thereof of desperation. I thought that's a controlled IPO, just to make it a token IPO, to make it public, but not so much that you're selling it at, one, really terrible prices perhaps, or not a good time to actually start an IPO. And two, shows me that, you found other ways. You're not that desperate to sell off some assets. I still am kind of iffy on them keeping that dividend right now, but I can understand that they don't want to lose their streak, so to speak. And they know that their investor base probably cares about it, but I'm not going to get everything that I want. And who knows? Maybe management's right. That's why they get paid the big bucks, and maybe they're right. Maybe Pat Gelsinger is like, all right, we don't need to do it that way. We can go about it elsewhere. I don't know. So it's not going to make or break me. I'm going to be watching it, and if I get better prices, I'll accumulate more of it. But it's not taking away or redacting from my positions that I wanted to build out in Qualcomm and AMD. Now, AMD, it's kind of somewhat positive now, but small position in the portfolio, and same with Qualcomm. So, but yeah, Intel's going to get its own video, as hinted in the Snapchat video. So, but now you know. Now there's no secret whatsoever. Born after. Can you touch on why you've designated Intel as core versus AMD as partial core? Okay, so actually that might be a mislabeling. They could all be partial core as representing my semiconductor. So yeah, just keep that in mind. I kind of just fiddle with it. These aren't like hard labels. Don't focus too much on the labels too much, because sometimes I'll even buy one that's designated as holding. But it's kind of like a general thought. In reality, I need to change that and actually designate Intel, AMD, and Qualcomm as like partial core, because together they make up like a player, so to speak. I was a bit more aggressive in my acquisition of Intel due to the valuation. But yeah. I am always watching. Thought your 3%. Thoughts on a 3% yield on Capital One savings account. Oh, we can talk about that because you know what? Funny enough, a lot of people within the community have been asking me about that today. Just general thoughts, and I'll give you my thoughts on that in a minute. So I have a decent chunk of the savings in two other banks, not the Capital One, but if they're offering 3% yield, that's pretty good. The reason why I prefer a high yield savings account over something like a CD is mainly due to the convenience factor. I like the idea, and remember, I've spoken about this before, but if we think about it from the standpoint that if I'm holding this cash for a purpose, and that purpose is to buy real estate, right? I want to have that capital accessible conveniently. I don't want any lockup or fees or anything like that. Even though I might be able to eke out more yield with, like, let's say something like a CD or a short duration bond. I don't want to have to put any capital at risk because remember, with a bond, you still technically have the risk of capital loss if you need to sell it before it matures, right? And depending on where rates are going. So that's the key, unless you're holding it to maturity, but then you have to be perfect on your timing. But let's say I find the real estate deal tomorrow that I really want. Well, if I have a high yield savings account, I can take that money and I can put it to the deal. But if I have a CD, not so much, right? It's going to be a little bit more problematic because maybe there's fees involved. If it's a bond, maybe I have to wait to maturity. I like the convenience of saying, yeah, boom. So if you find one that's 3%, great. I mean, by the way, did you know that I'm pretty sure, I could be wrong. I think technically the only things you're legally allowed to give true paid financial advice for is individual financial advice, is insured accounts at banks and treasuries, I believe. Don't quote me on that. But if you're a lawyer out there, let me know down in the comments. So let's see here. Fabio, I blanked out during that speech. So Intel a buy in your mind or nah? AMD like it. I'm accumulating Intel. The speech. Okay, read too much into it. I see core versus partial. Yeah, no. That's what these live streams are for. It's like for you guys to ask things live. So it's like instant feedback. Also, it lets me know what I can explain better and what I need to probably address more. So I really like live streams way more than videos because of that instant feedback. Because it's like, okay, hey, touch on that more. Okay, you didn't get into that as much. My read on Intel is that the company has gone from awful to quite bad, hence the opportunity for buying. Yeah, like there's like a turnaround. There's opportunity for a turnaround here. But the thing is, it's a far different price than 50 to 25, 27, around there. So, with my cost basis, it's far different from like a 50 plus price point. And I think there's actually Seth Klarman has it at much higher prices. And of course, you have these other larger YouTubers that have it at much higher prices. But don't mistake it for me, my favorite company. Bruh. Hello, bruh. I'm getting effed over here by Chase. Yeah. So I like Chase, but be competitive. Retail is not their priority. You have to understand that. So the retail segment of their bank is not their priority. So they're not really going to be very competitive. Just go where you're treated best as a customer. That's the beauty about, the market system. Just change it up. Hey, Fabio, assuming Baba keeps growing, you think if Baba stays at $70 forever, once has $1 billion in free cash flows per share, they will give shareholders a token to... Okay, if that were to somehow occur, yes, because they just need to make sure sentiment doesn't completely die out. Like the Chinese companies, they need to make sure Western sentiment on their stocks don't die off completely. So I do think, for example, there's going to be some commentary by the Chinese or the CCP or the companies themselves. Well, usually with the permission of the CCP, because everything kind of has to go through them, guys. But yeah, Perry is a secret stock. Yes, there's no videos on Perry. Yeah. No, but yeah, Perry doesn't have a video, but it's the only one that's made it to this size that doesn't have a video. It's because I'm hesitant to do videos on stocks with smaller market caps. It's just how I'm gonna be. But yeah. Hey, no worries, Jerome. No worries. I love to do the streams for you, and I love to have you guys here to be able to ask questions. That's what it's for. And by the way, if you guys enjoy these streams, I'm gonna do it shamelessly. I'm gonna shamelessly say, if you do, only if you like the streams, feel free to leave a like. You don't have to, right? But if you do like it, consider leaving a like. Lets me know to do more of these. Okay, so any other questions? Rick offers a nice yield. Yeah, Rick's the one that we took as a joke, man, but it was solid. It was a solid company. What's up with AbbVie? That's a lot. What do you mean what's up with AbbVie? Nothing's changed with AbbVie. Yeah, no, nothing's changed at all with AbbVie. Paulie, what is your question on AbbVie? The position, nothing has changed in terms of share count. G. Anderson added, any other REITs you like? Well, there's the REIT that I have a speculative holding in, which is MPW. Where's my mouse? There it is. All right, so MPW, I bought a speculative holding in MPW. That was updated, I think the last portfolio update. So, by the way, my very negative video on MPW still stands, by the way. That's the reason why it's in the speculative side. It still stands, and so I am still cautious on it. It wouldn't make it into the core holding of the portfolio, but I thought it was like stupidly cheap. So I was like, yeah, let's try it out. It's like the size of Baba, right? It's not that big. But I'll reduce Baba if we get that pop from the CCP, which I really do believe we're going to get something like that. But we'll see. I could be completely wrong. I saw the report that the Chinese market being approximately 1/3 the size of the GDP numbers. Chinese stocks are scary. Oh yeah. I actually just talked about that earlier, and I released it in my newsletter on Friday. So I was going to do like a podcast, but I just did a newsletter because I was too busy to actually sit down and do the podcast. But I really like the podcast. By the way, if you guys don't know about the podcast I did start, I am on Spotify, and you can watch it on Spotify. I'm working on Apple and Substack. Substack gets you like the newsletter as well, so I might like release like a written update, stuff like that. But hi, I've just tuned in. Oh, we got a question here about something. Yeah, no. Oh, by the way, G. Anders. Yes, no. Very risky company. So it's because it could turn out really well, but the thing is, always you have to consider what is the downside, not so much the upside, in my opinion, especially when you're kind of delving into individual stocks. Because, yeah, just like a general rule of thumb, right? What are the problems? What are the issues with the stock? I think that should be focused on more. But on YouTube, I feel like, people who make videos on YouTube, they almost sounds like salesmen about a particular stock, and I'm not going to do that. So even though I own it, I'll be the first to tell you all the bad things wrong with it. So Substack is Eurodollar propaganda. I mean, I haven't talked about the Eurodollar system yet, Nash, yet. Okay, so we have a question here. Hi, it's from Scott Crouch. Hi, I've just tuned in. Have you discussed Rio at all? I see it's 1 year lows. What price do you think it's a good entry point? Thanks. Well, I can't really tell you that answer directly. Well, the first reason is because I haven't looked at it in a long time. It's just a watcher position. It was a piece of the portfolio, and actually, fun fact, it was one of the failures within the portfolio. I think we barely made a profit on it, but BHP was a huge winner. So we had like a play earlier this year with materials, and BHP we got out about 40-something%. Rio Tinto, we didn't get really anything out. Rio Tinto has since then collapsed, as you can probably see. It is down quite a lot, and for a couple of reasons. You do have the concerns that there's going to be demand destruction, and you also have currency concerns with the dollar. So as an American investor, a lot of foreign stocks are looking pretty cheap. I was discussing via message with the community about some European stocks, just sharing my quick thoughts randomly at nighttime. Stocks like, for example, in oil that have performed terribly, and they're not American oil stocks, like BP. So British Petroleum, they're not up as much as, let's say, other oil majors. Now, BP has a lot of initiatives for, green energy and all that, but they also have one of the lower, well, you also have to take a look at their petroleum reserves, but they also have I think one of the lowest, if not the lowest, break-even point for U.S. oil majors. So, fun fact about them. Okay, so let's see here. But I think that materials they looked cheap, but that's the thing with cyclicals. Oftentimes you'll find that cyclical stocks will be expensive when they look cheap and cheap when they look expensive. So I think I'm optimistic that the world is going to continue to improve, et cetera. And at one point, I'm going to be able to, look at Rio Tinto or look at other material stocks and be confident that, the global economy is going to continue to use more and more of these materials. And then they're going to be there to basically fulfill that demand, et cetera. So, but I'll tell you, man, if the report is kind of true, oh, no, this cat ate, no, just come here. My cat just came in and he was literally just about to jump across the screen and I had to stop him. He gives me the eyes, like he's like, oh, I'm gonna do it, and he knows like I have to give him attention or he's gonna mess with my stuff. All right, but that's basically he's probably hey, no, don't jump on here. Just I'll give you the attention you desire. Just stay down there, because it'll be on camera. Don't worry, kitty. All right, it is not Tesla cat. Oh yeah, I forgot. Isn't stock mode? Doesn't he have like a black cat or something? Have you ever thought to condensing your portfolio to just yes, absolutely. No. Before you guys have no idea. Like back in the olden days, my portfolio wasn't that diversified at all. I basically had a lot of plays in cloud and e-commerce, and that's pretty much it. So, but as the portfolio grew in terms of size and I began to look at it more of like capital preservation more than anything. But if you really think about it, they all have a role to play, and I'll shuffle here and there, I'll make some moves, but I don't like to. Thoughts on Oh, we'll talk about that in a second. Yeah, he's biting a box now. This cat. Just don't bite the wire. Yeah, you can bite the box. What do you think about Amazon? Hey, no, just come here. Don't jump. What do you think about Amazon, PayPal, Nvidia, Google? Amazon, great. PayPal, meh. Nvidia, caution, but good. And then Alphabet, great. Oh, Amazon, great. Oh, no, there he is. He jumped. See, he did it. That's what I was telling you about. All right, come here. I'll give you. I have a black swan as a pet. The cat is not named Rue. The cat actually has a human name. Okay, so I got a question here. Thoughts on EMs? Oh, I can talk more about Amazon, but Amazon is a very misunderstood company, especially within the community, I would say. Because again, I've debated people within our community about the quality of Amazon. You guys know who you are. You guys know what you've done. No, I'm kidding. No, but it's great because I really do like differing opinions, and everyone's like it's always an intellectual discussion. Always like, okay, but have you thought about this? But have you thought about that? And I love that. So Amazon is a company that in the next couple years is perhaps going to outdo and outshine Meta's advertising business. I think that's what the projections are kind of stating. And it's pretty, I think it's pretty crazy just to think about what Amazon has accomplished as a company. I know that, okay, we all know what happened with the Rings of Power. Okay, let's leave that to the door. Their media segment can improve. Obviously can improve. They've had some good ones, guys. They've had some good ones. They have some good stuff on there. But it's a room for improvement, yes. And let's see how season 2 kind of plays out. But as an ecosystem that Amazon has built, it's pretty insane. They've basically added Walmarts, Targets, everything you could think of on top of the cloud. Oh, here he goes again. Oh. He's just gonna like do it because he wants attention right now. He's like basically telling me like end the stream. I think maybe you want food. Do you want food? Do you want attention? But anyways, guys, I was pretty much done with saying anything else. Thoughts on Etsy? It looks like a decent company. Oh my God! Of course, Kingdom of Finance. You're coming on here to spread your Etsy propaganda. But wait, where's my mouse? There it is. All right, I'm having to juggle reading comments, making sure the cat doesn't like jump, but giving him affection at the same time. And then, yeah. What? Oh, I didn't want to. I actually didn't want to. I'll come back to your comment, Kingdom of Finance. I didn't want to skip over Bruh's comment. Okay, Bruh is asking. No. Bruh is asking thoughts on everything money's proprietary structure, capital destruction, obliteration, and how it compares. Oh boy. I mean, I think it speaks for itself. No comment. Oh wait, sorry. Value investors look dumb in bull markets. Oh wait, is it bear markets? or is it both? Or maybe they're not value investors. I don't know. You guys be the judge of that. Because I forgot which market you're supposed to look dumb in, the bull market or the bear market or just both. But yeah, I don't know. All right, so thoughts on Etsy from Kingdom Finance. It looks like a decent company. No, Etsy looks like a decent company. It's just the valuation that we probably would pay for it. I think we've already talked about this, Kingdom. You already know our thoughts. We've gone back and forth. You've even said it yourself. It's going to be a comparison with tough comps from last year when we see their earnings this week. And based off of how everyone else has been doing, well, I don't know. Maybe they do good, maybe they do bad, but it's not about what happens on the day of the earnings. We're going to see how the business kind of progress. Was it a fluke year? Did they just pull forward a lot of demand? How is the discretionary spend going to go? All these questions are going to be somewhat answered in this quarter, but we'll see. I know that members of the community really do like it, but okay. So Kingdom Finance, Etsy is going to do an Olaplex at earnings. Let's see here. Start the Paul ETF. Oh, S Paul ETF. I mean, maybe we should. I don't know. Maybe I'll talk to some people and we can see how we get that started. And maybe we'll do it on like M1 Finance. No, M1 Finance doesn't even allow you to short things. So, anyways, but we can just keep track of it. I will buy the dip. Remember, as a value investor, you are down for 20 years and then up massively a few years after. But the thing is, you're never up massively. I mean, if that's what a value investor is, you're never up massively. Mindset, start a value trap portfolio. Yeah, I can do that. I mean, I'll tell you what, he's a good screener. He definitely is a very good screener for that kind of stuff. So, Tech Lead warned everyone about Metastock. He did. That'd be funny. Isn't Tech Lead also like the million token guy? But yeah. What are the cons of a DCF that uses a multiple? You having to know what the multiple is. That's the con. But yeah. Guys, okay, this is a good time to address this because I feel like YouTube is being flooded with it and it's getting problematic. People are creating a ton of DCFs and there's a million ways to create one, and unfortunately not all are created equal and some are better than others. And if you are not careful and you become reliant on them, you're going to make a lot of mistakes. And if it's designed improperly, it's going to make a lot of mistakes. So that's all I'll say on that. But to answer your question, you have to know the multiple. The con of the DCF is the person itself making it. Yeah, I'd agree. Okay, so going through it, it's only $29.9 per month, but Capital Mindset shows his options trading strategy. I do not have it. Again, everyone who's newer to the channel, say hello to Nash. Nash is a very valuable member of the community, but he's also very how do you say? He doesn't show any mercy to newer members. He doesn't show any mercy. They're really funny. So like one time I think it was you, Nash. You and Cole conspired to completely troll some of the people, telling them that certain people came onto the call that didn't come onto the call. I mean, it's funny though, but should there be a rate DCF episode? Oh, like a tier, like an S tier, A tier, B tier, etc. Yeah, we should do one. I've been requested to do another one of the finance YouTube ones, but I'll see. If you guys create it and you send it to me, I'll be more than happy to do one. I think they're fun, but I'll have to have guests on. When I have guests on, we can all debate it, and I'll have like maybe, I don't know, Jay or Cole on, and then we'll talk about it. But yeah, it should be fun. Oh no, Nash, you got so many people with that. It wasn't even funny. At one point, at the very beginning, you had me. I was like, what? How did he get in? But yeah, no, it was crazy. It was crazy. All right, so I apologize, by the way, if I didn't get to your comment. So because sometimes the comments go through, but if there are any remaining questions, I'll be happy to answer. I'll be closing this off at the hour mark just to keep this short, sweet, and condensed for people who want to watch this after. and not make it like a 3-4 hour thing. Also, my wife wants to watch a movie. That's the other reason. And we have to watch our movie before one of my friends comes over because he wants to watch a movie as well. One of the Netflix movies that came out. So, but yeah. And I think he's bringing food. If you're listening to this, my friend out there that is coming over, it would be great if you brought some food. That'd be good. Oh, the movie is okay. Perfect time to absolutely shill Netflix because I guess I have to because of the largest holding in the portfolio. I guess like I have to shill Netflix. Like before I shilled YouTube, right, or shilled Google, but I guess I'll shill Netflix here. But the movie is All Quiet on the Western Front. You guys should check it out. Yeah, check it out, Netflix. But the Star Wars sequels, definitely. The Star Wars sequels, definitely not, man. Definitely not. That. UA Under Armour is super low and low debt compared to on-hand cash. Do you think it's a good place to enter? I haven't looked at Under Armour in like a long time. The ones that I've been requested to look at recently, and I think I took a look at them like last night when I was giving an eye on a bunch of the European stocks that really gotten hammered. But we have LVMH. We have all the fashion companies that we've already spoken about in previous calls. But you also have like Volkswagen and Porsche, the whole spinoff that's going on there. Is there potential there in these really beaten down car companies because they're European? And I feel like some of it might be undeserved. We'll have to investigate further. But Under Armour is another one that's been. But Under Armour's, I have to see if they've fixed the issues they used to have. You are referring to Under Armour, right? UA. I know ticker symbol is UAA, but you might be referring to Under Armour with that. I don't know. I could have misread that. Under Armour is trash. Steph Curry is going to retire that brand. Going to die out. Yeah, like maybe. The thing is, I usually stay away from fashion brands except for the top of the top, like LVMH. LVMH is one that I probably would be interested in adding. Let's see here. Proper British film choice there. It's actually, well, I don't know. It's going to be from the German perspective because 1917 was the British perspective. All Quiet on the Western Front is the German perspective. So, did you look into Align Technologies? I have looked into Align Technologies in the past, and I've heard it's recently come crashing down. So, yeah, it was a really bad quarter. I'll take a look at it. Thank you for the response. What issues are you talking about? Yes, I am talking about Under Armour. Okay, perfect. So back in the day when I looked at Under Armour, there were some issues that they were having with managing their inventory and margins. And I don't know if they've come to terms with that. I think there was, I don't remember if it was Under Armour or another retail company that had the CFO, not the CFO, the CEO or the management change because of it. But they were at one point, they came back, like they came roaring back, but at one point they were actually struggling. I'm talking about 3 or 4 years ago, around there. If I remember, it was Under Armour. Let me check real quick. Yeah, no, it was. So this was a long time ago because I didn't look at them during the pandemic. I was looking at them back in the day. What I mean back in the day is like 2017, 2018, 2016. Around there were a lot of struggles that Under Armour was going through. And it seems like they have never recovered to the all-time highs that they were at. I should probably show this for you guys so you guys can see it. So this is the max chart of Under Armour. So they never recovered to their all-time highs of 53.57. But yeah, around this time period, there was a lot of stories going on. You can see right here, these are reports going on right now. Report, and that was a date of a report. I remember those days. Under Armour won't let Curry. Maybe because they'll go to his house. But yeah, that's kind of my general thoughts. If there are any questions on positions, I'll kind of just finish off or have some closing thoughts on Meta. I think that Meta had a very terrible quarter from a lot of people's perspective, a lot of investments in R&D, which, to be honest, I actually don't think it's that bad. I really don't. I'm not, but I'm also like, you can see that position sizing is really important, and it's kind of an art as well, more than anything. And if you don't do it properly, I feel like you can put yourself at risk of one kind of also I don't know, coping. People call it copium, having copium, right? And you know, like you have 50% of your portfolio into a stock, and you know, you start to deal with some copium, right? You start to say, oh, you know, it's great, everything is great, nothing's bad. So I think there's a balance to be had there, and you know, maybe some of you actually think that you know, maybe, like, again, maybe some of you think that I'm having copium with it. That's fair. But I personally don't, right? And again, I like to think I'm open-minded person. I don't find the same issues with the R&D spend as others might have. But also, again, I'll be talking about it more in Q4 2023. But I think there's going to be some interesting points to be talking about on the first stages and rollouts of the metaverse in the business world. So I'll be able to maybe talk about it a little bit more at a later date. Oh, but all in all, I have a good feeling about this one. But it could be one of the ones that's wrong. It could be one of the ones that's wrong. Absolutely. So I'm keeping it at a controlled position. However, I'm more than happy to kind of, you know, add more capital, you know, take from my savings and income and add more capital to it. I still have the dividends coming in, the dividends from my old workplace as well. And of course, the salary as well. So, you know, and we have a decent cash pile ready to buy real estate that I can, you know, move around a little bit. So it is what it is. Okay, so, okay, how about funeral home companies such as CSV or, you know, who's a good, I should ask my brother about that because he bought a big chunk of those guys. I don't know if he still owns them. I haven't actually talked to him about his portfolio, but I know that the one he chose, I think, was SCI over CSV. But I don't know if CSV might have performed better. They are similar to REIT, but I think they are decent. No, yeah. I think he preferred SCI because of its scale, but I think CSV is the smaller player. So right now, the thing is, I think they've still had a decent run up. Let me see if they've even come down. And then after this, I'm going to be closing out because we're right on the mark of an hour. Yeah, no, they're still at $61 a share. I don't think they're at, yeah, no, they're literally just up and to the right. Park Lawn is underrated. No, yeah. Well, Park Lawn, I saw your write-up on that, Kingdom, and no, I'd agree. It looks interesting. Park Lawn. That's the Canadian one, by the way. Did you see Office for Meta Quest Pro and productivity applications? Yes, I did. I think that going back to your question or comment, brah, and question, because it was a question too, I see like on the internet, a lot of retail is kind of still viewing it as Ready Player One. You know, it's whatever. And they're still seeing it from not the commercial side, but the consumer side, which is a potential to drive further revenue in the future, of course. And again, I don't think that maybe we could say that Meta doesn't win this, but I think that one of these companies that is really trying to develop it, one of them is going to win, but I think that's the direction the future is going to go. That at some point in the future, there's going to be an ability to kind of replace. I have all these screens in front of me. I have screens over there that are for work, right? So these are screens for Capital Mindset. The screens over there are for work, right? Why do I have all these screens? Why can't I just have, you know, all the screens in one place that's not really here? But much lighter, much actually cheaper probably if you consider all the cost that goes into getting all these screens when the screen, you know, well, they last a long time, but getting these screens in the first place. I mean, this main screen is, you know, let alone like about 500. And then this one's given to me, those other ones were given to me, but someone paid for them. And then this one was, I forget how much this one was. I bought this. I have too many screens, I'm just realizing. God dang. Because I have monitors downstairs too. So this one came in a bundle, and this one I think was like at a cost of like, you guys don't see this, but like, okay, to my left, to my right, in front of me, to kind of orientate. The one on the left, this one's 1080p. I think the bundle, I think it was like a cost of like $200 per screen. So yeah. So I don't know. There's just some quick thoughts. All right. With that being said, if there are no more questions, I'm gonna, you know, keep the room for a couple more questions. But if there are no more questions, I'll close off. Okay, I don't see any more questions. And so in that note, I'm going to be closing it off. Oh, and by the way, I think I'll say this just in case you guys were interested. Down in the description, I have links to stuff. It's free stuff. So we have the Discord. The Discord is, but by the way, you do have to, the Discord is going to be annoying to get into. Okay, it is. And it's that way on purpose. I don't really care too much about the growth, more about maintenance of quality. So there is a Discord, but don't expect that it's just click and get in. You have to go through first a process that eliminates bots, then an interview process. I might be doing some interviews here and there. I said in the beginning I wasn't, and I did some in the beginning. Now I have other people doing the interviews. I might do interviews here and there. I'm going to be a bit, well, I don't know. It depends on what you say to some people. They'll let you in pretty quickly, I think. But then there's the Substack. The Substack is where I have my podcast. And you might see podcast episodes. Some of them will go to YouTube. Not all of them are going to go to YouTube. Some of them are going to go to YouTube. Others will not, because the podcast allows me to be more, let's say, open about certain topics or direct about certain topics than YouTube might allow. And then there's Spotify as well, as that you could also listen to. So, but that's all in the description below. All of it's free. Now, in the Discord, just to be clear, because there's no surprises, there is a paid version, but you don't have to join that. I do provide, there is a lot of value in just the free one. A lot of people, I talk a lot in the free one. The paid one does come with but again, you have to pass through the process first. You can't just join the paid one. You got to pass through the process first before you get access to that. And in that, we do like a Sunday call, and that's about it. So then that's all out there. I have to do a video about it because people have told me it's too much of a black box. And so I'll make a video at some point in the future when I have time, kind of explaining everything in its place. Like what is the Discord? What is the Substack? What is that? I'm saying here at the end of this video, but that's not going to do its justice. But just know that those are all there. And I think that, yeah, that is everything, but I think that covers it. And I'll answer that. Capital mindset. Do you agree with Meta's capital allocation? Seems very aggressive. So let's see. Could it be better? Yes, but I'm always going to have those gripes. Do I think now is the time to be investing in that? Actually, yes. If I think we're going into a recession of sorts, if they have the cash flows to maintain that investment while their competitors are the ones who are cautious on it, the thing is you want to have the product feasibility at the point of a recovery. And if we're entering the recession because of durable, and Nash asked me to talk about durable goods throughout this live stream, but we're already out of time. So I guess we'll save that for tomorrow, Nash. But have I checked out Comcast? I have checked out Comcast. I think I have a video on Comcast, by the way. But going into your question, let me bring up your question because I want to highlight it. So, but it's a really good question. This is why I like live streams. Excellent question. Because I've complained about other companies' capital allocation in the past. All right. So if you're trying to achieve product feasibility on something that's going to be grand and next, well, you want to try to do that and achieve it hopefully at the beginning of, let's say, the next run, the next economic growth phase. And well, also you'll be basically part of the reason why we might have that. You could be, because maybe you're building like a new frontier or whatever. But same with Amazon. I would say like Amazon and Meta, different. There is a difference. I'm not going to say they're exactly the same, but you see that Amazon is super aggressive right now in investments. They've been aggressive in the past year or so. Well, they've invested way more than their competitors. They're going to have an infrastructure way more developed than their competitors. And their competitors are the ones that are going, oof, things are getting tough. I should hold back and be more conservative in my investment and my infrastructure. So that's going to allow them to kind of step up. And that's usually what we can see. It's so that the bigger and healthier players are going to take more from the ones that weren't able to do the same thing. A lot of the non-cash flow positive SaaS companies that were burning cash and unable to make the necessary investments, and in, let's say, a time where businesses cut back on spending, because that's what we're going to see, by the way. Businesses might cut back on spending. Well, then they might not have as much of a budget. The capital markets aren't going to be as favorable. They're not going to be able to raise as much capital via stock issuance or even debt issuance because rates are high. So the ones that are able to generate tons of cash flow and make those investments, well, they're going to be there to basically benefit from the next tail end of things. So that's just how it is. And so Amazon's there. They're able to benefit from it. They are still able to access plenty of capital at pretty good rates. And they're still able to access, well, the cash flow that they generate. Meta, same thing. Apple, same thing. Let's not count them out, by the way. Apple, same thing. Alphabet, same thing. There are other ones that I'm not mentioning. Microsoft, same thing. Salesforce, same thing. Adobe, same thing. So these guys are all going to be doing fine. And if managements decide to continue to do the capital investment while their competitors kind of cut back on it, or they cut back but not as much, that's going to probably, if it's effective, be used. Because now here's the second part of the question. How effective do I think it is? Well, the answer is we don't really know that. That's almost nearly impossible to know, only in so that I can ask people who do work there, what are they seeing? What are that they are allowed to tell me, by the way? Because if any of you, by the way, work at these firms and want to have that conversation, I never ask beyond what you're not allowed to tell me. Usually it's sentiment questions anyway, because that tells me a lot without you saying a lot, right? So, talking to someone who works somewhere and just them saying how they feel to me can sometimes, you know what I mean? Like they can say, I think that I feel good about working here. I feel like there's good prospects about what I'm doing. I feel like what I'm doing has meaning, for example. Some things like that can tell you a lot without them saying, oh, we're working on this project and this is like the top secret. No, you don't need to do that, and you don't want to do that. You don't want to get them in trouble or you in trouble for that. So yeah, capital mindset. Why do you like the metaverse? Meta-owned employee doesn't like metaverse. We'll talk about that in a later date. Do you think the metaverse will be a nightmare, No, I don't think so. I don't think so. From Google and workers' exploitation. Oh, you mean from goggles? From goggles and worker exploitation? No, I don't think so. I think that is a concern, but I think the concern is kind of like being seen from a far away. Big corporate, a lot of companies, they do, not all companies, but the most successful companies, they do care about the well-being of their employees to a large extent, because you want to be a place where talent wants to go work. I mean, we were talking about in the community, and some of you were even complaining about how good it is to work at some of these tech companies and the corporate offices, and how basically it's like more of a vacation spot where you have all these amenities, and you wonder like, okay, oh wow, like this is what corporate servitude looks like. It's like, my gosh, no. Yeah. Nash is always worried about my mental health, it seems, but no, I very much appreciate it. So no, I'm gonna go enjoy the film. The first film on the itinerary is that film with Harry Styles, whatever the hell it is. I heard mixed reviews, but my wife really wants to see it, so we're gonna watch that now, and then we're gonna watch when my friend comes over. Which, if you're listening, I don't know if he's listening. Get the food. Maybe some wings. Maybe some pizza. I don't know. But yeah. Why are you not Meta invest more in the marketplace? Why are not Meta invest more in the marketplace? All right. So this is where I kind of close off the questions, but these are good questions, so I have to answer them. So, why? So, I think that I don't think they're necessarily neglecting it, but I think that's an exciting part, right? I think the marketplace, like Facebook Marketplace, is the new. Gosh, what's the name of the old place? I already forgot their name. Craigslist. They're the new Craigslist. Like, they're the place you put on stuff so you can get your money. And WhatsApp is still going to be monetized in all these other countries. Like, Americans kind of have a harder time thinking about WhatsApp, I think, or they think they don't understand how important it really is. I communicate with all the people that I message that are not in the United States. I message through WhatsApp. All the Canadians that I speak to message on WhatsApp. The ones in Europe, WhatsApp. And that's because they brought me on there. Before then, by the way, I used to never use WhatsApp. I used WhatsApp because they were like, please use WhatsApp. If you want to talk to me, use WhatsApp. I'm like, oh, great. Okay. So I'll use WhatsApp. Fabio, is your short, how is your short position? Well, I wish I shorted TTCF. Wouldn't it have been nice, Fred? Wouldn't have it been nice to short Tattooed Chef? But, no, what's Tattooed Chef been doing lately? Oh my God, it's mooning. It's mooning to 3.28%. But yeah, no. Would have been nice. Yeah. All right, guys. This was a lovely stream. That is your portfolio update. I answered your questions as well. So portfolio update towards the beginning of the video. And we finished off with Q&A as we always do. And remember, I only answer questions if you pay me. I'm joking. And yeah, with that being said, I'll see you guys on the next one. And we'll leave it out with the funny clip again.
We'll do it live.
Okay. No.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
Yeah.